Be here. I'll let the gentlemen introduce themselves, starting with Anson. Couple of bullet points. Keep it.
Okay. I'm the chairman of Access, a blockchain association here in Singapore. I just then the speaker was saying we're the experts. More like, even though I'm the chairman, I am actually still a student because Access is dealing with blockchain, which is a very wide application, not just for fintech, InsurTech, and so on. So the agenda that I'll be saying mostly will be about what I'm learning from the associates of Access, telling you about what the experience of insurance and blockchain would be like.
I'm Pavel Bains, co-founder, CEO of Bluzelle. We started in Vancouver and moved to Singapore 7 months ago, so now we're a Singaporean company. We build blockchain-based applications and the network that it runs on, and primarily focused on financial services and the insurance industry.
So my name is David Moskowitz. I'm the CEO and co-founder of Attores. We are doing data and document security using smart contracts and blockchain. Our target markets are both the financial industry, but we also have a prosumer version of the platform. So if you go to attores.com, you can sign and send your documents using blockchain.
My name is Nolan, and I'm from Canada, Toronto. I was working for the Senate Banking Committee for several years in our parliament, looking at sort of high-level policy. I did a long-term study on the meltdown and then terrorism financing, and that opened my eyes to Bitcoin. We did a one-year study on Bitcoin, hashed it into the public ledger, the first use ever of a government by the public ledger for something other than buying and selling Bitcoin. And then I got a job with CoinDesk writing their research reports, so not their journalism. CoinDesk is sort of the largest news outlet for this technology. And I also work for Skuchain. Skuchain is a California startup looking at trade finance, but their overall idea is that goods and money are moving to the same rails, and the implications for insurance are obvious. And I recently wrote a research report for CoinDesk on the uses in the insurance industry, which I'll be talking about tomorrow.
Okay, thank you very much. So we have mainly people from the startup side. So anyone in the audience who's from the insurance company side, this would be a great chance to stack up those questions, and I'll leave plenty of time at the end for your questions. It'll be a great opportunity to discuss this in the open. So the promise of blockchains in the beginning was allegedly to disintermediate the third party here. And this is what's got some juices flowing and some middlemen kind of sitting uncomfortably. We'll find out from this panel what's really going on. So firstly, insurance is a big industry. Which particular verticals are we talking about here when we're talking about smart contracts and distributed ledgers? Why don't you start?
Sure. I think we're talking about a wholesale change here. It involves every aspect of insurance. When I think of blockchain, I think of really a new transaction layer on the internet that's not relying on the sort of architecture that the World Wide Web uses. It's not a client-server model. It's not a bunch of accounts being held on one server and a ledger being held on a server. And I mean, that's really what's broken here, right? When you look at all these data breaches, the 500 million accounts that were stolen from Yahoo the other day, the $1 billion your typical bank has to spend securing its ledger from hackers, that's the problem. And the push transaction aspect of blockchain is really one of the most appealing characteristics, where we're not asking you to share way more information that you would normally have to share in order to make a simple transaction. And that's what it's about, you know. So it's literally every product line as far as I'm concerned, and I found use cases in every product line.
I think if you look at disintermediation, you have to kind of ask yourself what part of the process is going to be disintermediated. Who's the middleman that's going to get cut out? So if you take a look at, for example, claims processing, if you digitize that whole process, if you put blockchain into it where the claim itself is an e-receipt from the hospital being issued to the customer, being signed by them, and then the insurance company can then validate it or issue the claim on it and do some straight-through processing. So in that case, the middleman is your back-end staff, who would normally be processing all this paperwork. The typical middleman that I think Antony is referring to has to do more with financial institutions and banking, where they hold the assets on your behalf. So I think that in insurance, it's a little bit of a different model to be disruptive. It's going to be greater efficiencies for your institutions. So yeah, I mean, also in the area of data sharing, a lot of that just doesn't happen now, and so blockchain can enable that.
When it comes to probably the verticals or parts of insurance, what I'm seeing is, I mean, there's certain parts of insurance, yes, everything can probably go, but there's certain things probably that aren't applicable right now. Like, let's just say life insurance. There's not enough transactions that happen to warrant a blockchain solution because, you know, the whole thing of it is constant transactions. So there are some companies that, reinsurers that I've talked to who are looking at more on the whole life, how do you get involved early and leverage the blockchain so it does make use of it in terms of life insurance. The other ones, I think, as an educational piece, starting low and just saying, okay, let's put some product out, prove out some of the claims processing, is more along the personalized personal injury. We're doing stuff around hospitalization, short-term stays, and travel. And really, those aren't the game changers. Those are more just, hey, low-hanging fruit, let's get some stuff going. And then the insurance companies that we've been talking to is more about, hey, yeah, those are good right now, but let's really focus on new products, new offerings for new markets, and tapping into those things.
So for myself, I actually run a payment startup, so I'm not, so for Access, instead I actually did the interviews with travel insurance, the life insurance and medical insurance. And at least from the insights I got was, unlike fintech, insurance is a very different animal. For example, if in the medical insurance, you basically have to move both the insurance industry as well as healthcare together. So you can't just like, you make a new insurance product, but make the product and then have the whole healthcare system or the companies use you, because there's a lot of regulation involved. And so for insurance, unlike, for example, fintech, I was saying, it's mostly towards like banking, payments. It's basically linking to one main industry. So in terms of if you really want to push for insurance, you need the support of the expertise in both the insurance you're working in as well as the industry you are targeting.
So we had some arm waving and saying the whole thing is broken and the whole thing needs fixing. We've got David talking about the operations and the back-end stuff. So really you're talking about efficiencies and digitizing paper processes. I like that little switch saying the middlemen are your back office staff, not any financial intermediaries or anything like that. Interesting. Anson's talking about payments as something that's relevant to all of all insurance processes. Now, Pavel, you mentioned a few proof of concepts. Can we dig down into pick your favorite proof of concept without naming names and give a little bit more detail, if you can, on what specific business problems were there, why does it need solving, and how does a distributed ledger, which is what we're talking about, specifically solve that? Maybe it does, maybe it doesn't. Maybe it's the low-hanging fruit you're talking about.
Yeah, I think this was touched on in the morning too, is we did one around usage-based insurance, saying, okay, let's go into let's say millennials, people who don't, let's say in the 20s, 30s, who don't trust insurance. Why? Because they don't have transparency into pricing. They don't believe that they're getting the value that they pay for. So these are inherently things that the blockchain is supposed to solve, is trust and transparency. And so the thing is, well, why should I pay a year of car insurance if I don't really drive all the time? I should only pay for what I use, hence Uber, Airbnb, and everything else. So the use case that we developed around there was, okay, let's put telematics in a car. Let's calculate how a person drove. My driving record, let's say historically, is like this. So regress the analysis that, hey, I got such and such score based on time and distance and location. It came back with, hey, this is how much you used and you should pay. Now, let's just say if I went on vacation for 2 weeks and then my car was just sitting in my garage, well, why am I paying collision insurance when really it's just sitting in my car? I should just pay basic coverage for that time being. So these are the things that the user, is starting to see is the problem is that I'm not getting relevant pricing, and then if something happens, the claims processing takes too long. How can we just make that all simpler? So in this situation, what we believe, right, and we're learning all this stuff as we go, what the blockchain did was, by allowing for the contract to be then immediate out there, we can regress the analysis of the data, we can get short-term transactions done, and then if we put in a payment system onto it, now ultimately the banks are actually using the blockchain for payments, but let's just say we hooked up a stored value card like a prepaid Visa. Now we can do real-time pricing and process that transaction for like microtransactions, which is like basically the video game industry uses. So if you do that all on a distributed ledger, the cost efficiencies of doing a usage-based contract for that short term actually works out. if you did it right now, the claims processing takes too long, the payment cost is way too high, so you can't do a product like that. So we found that, hey, the blockchain can actually smoothen out that process and allow us to do lower priced products.
And to touch on that point about those dongles that the insurance industry is using for cars and telematics, you know, the FBI released a public service announcement last January in North America saying it was those devices that were allowing cars to be hacked. You know, there's someone who was speaking earlier told me about Tesla. They're bringing these new Teslas there, and they're getting hacked within 30 seconds. 30 seconds. Gone. Doors opening, all the rest of it. We know that know your customer is an important provision as far as regulators go, but know your machine is becoming more and more important. Machines are going to have to take on a legal identity themselves. They'll have to take responsibility for the things they're doing, for the information they're putting out that are causing consequential payment reactions. The only way to do that really is to have them operating on this unique layer for transactions. So it's one of the most important, I think, you know, insurance really is this very dead simple business. Promise to pay, the bond of trust. The people that are involved in the bond of trust. There is a new participant that is entering, and it is the machines. And we have to integrate them somehow. And this is a uniquely capable technology to integrate those machines into this bond of trust.
I'm not sure how to react to that.
Oh, okay. So, Nolan, you mentioned earlier on in your opening comment, you mentioned lots of data breaches, data getting stolen from one centralized database with a wall around it, and that wall was penetrated by attackers. And just now you mentioned the cybersecurity threat of vehicles and other things. What makes you think that a distributed ledger, as in data that's replicated among more data centers, what makes you think that's more secure than one single piece of data in one data center? Surely the surface area of attack is bigger with a distributed ledger.
Well, it's because you're incentivizing the nodes themselves to involve themselves in security. I mean, the thing about Bitcoin, for example, it didn't outrun the hacker. It didn't make encryption so clever that the hacker couldn't get in. The important, you know, the thought experiment, if a tree falls in a forest, you know, If I say to him right today that I owe him money in case he breaks his leg, but you've all heard that, right? You've all heard me say it. I owe him money in case he breaks his leg. I'd have to lie to each and every one of you at this point in order to make that promise not have, like, that it's gone, right? You can't come in and change the information when there are that many witnesses in the network. So it's just a new architecture. It's a new way of using old technologies that make it more secure.
So from a company point of view, when we're using a public blockchain, we're making sure from the get-go that it can't be hacked. We're assuming it's going to be hacked, right? So based on that assumption, we have to build in certain safeguards within the data, within the encryption methodology. I think when you're building a closed system, you get lazy about the security, and you think that you can add on things after the fact. You can add on two-factor maybe to secure it a little bit more, but you're forgetting about that core vulnerability. We're assuming that the core vulnerability is there.
So in terms of data, linking back all to that, the problem right now we have in the real world is when you do a claim, you actually have a lot of paperwork to do. And because of that paperwork, that's why it's having all the, it's taking such a long time to actually get your claims done. So for example, the insurance associates that talk in Indonesia, it actually takes more than 9 months to get your medical claim. Okay. However, in South Africa, it takes less than 1 month. So
without a blockchain? Without
a blockchain. So right now, that's why I'm saying I'm still a student, still learning if it's viable within the insurance industry, because in terms of medical, because there are countries that are doing well by having shortened the claims time, but there's some countries, maybe because Indonesia is way bigger than South Africa is, a lot more people to deal with, so maybe the infrastructure can use blockchain to help facilitate.
So we're really talking about digitizing. So the question I had was before distributed ledgers and blockchains came along, a lot of these problems that you're sitting here talking about still existed, but they weren't being solved, which was interesting to me. That we're in 2016 and a lot of we're still pushing bits of paper around, but the technology existed to solve for that. Why do you think right now people are looking at this technology with a slightly different viewpoint to looking at regular like internet portals and web and digital ways of clicking on things and typing into things. What do you think is it about blockchains and distributed ledgers and smart contracts? Maybe you want to bring that into it, David. That makes it so exciting and something worth looking into and investing into right now.
I think it's thanks to Silicon Valley and the disruption that the tech companies are bringing to the industry. The industry itself doesn't have a choice but to adapt, and this is the right time to have it happen as far as blockchain and other technologies. Previous to this, you had regulatory overhead to prevent anyone else from coming in. We're moving into a global world where I can get insurance in any country in the world. That'll cover me. I can go on the blockchain and get insurance in some cases to pool coverage together using cryptocurrencies now. So there's fierce competition, and I think the industry is reacting to that. Maybe not as fast as some of us would like, but they are reacting.
I think also now, probably the timing's changed because there's just consumer shift. People always talk about fintech trends. I like to only relate to, there's only one fintech trend that's happened, and that's basically the movement of money from high dollar amounts and low transaction volume to extremely low dollar amounts, but extremely high transaction volume. Cases, remittance payments, those are growing exponentially. B2B payments of small to medium. People think remittance is a big industry. Small to medium cross-border payments for B2B businesses is huge because of places like Alibaba where I can buy stuff for like $1,000 and ship, where before to make a good importing-exporting business you had to do like $1 million a year. So that fundamental shift of consumers saying, listen, we're going to do extremely high transaction volume but low amounts, you need to service that in a way. And that comes to basically person-to-person payments and insurance products. So I think it's more a shifting of a global place of more people going into the middle class, emerging markets getting richer, and all those things are basically playing into it, that financial education that you just need lower priced products for that coming wave.
And, to touch on those 2 points exactly, the digital revolution has its own physics, let's call it. It has its own pull. It's not just efficiency. They've had more efficient plays before. What Bitcoin did, and the first cryptocurrency did, is make something digital, uncopyable, and therefore unique, and therefore property. The fact that they had made something digital that was property means we can shift the entire paper world into this digital world. We don't need to have the official document that's paper any longer, and then that represents some type of truth. This is about the complete digitization of value, property, and many things at once. So it's not just a question of efficiency. I mean, it's more efficient for me to take a helicopter here to work every day, but it's not practical. There's no real incentive to do that, right? This is part, if the digital revolution was a book, this is a new chapter as far as I'm concerned.
Actually, one thing I want to add to that, when we say digitization, we shouldn't generalize it because I can take a document, turn it into a PDF that's digitized. What we're talking about digitization is cryptographically, mathematically digitizing something so it proves that that one thing is what it is. And when a transaction goes from myself to Antony, it's true and it happens to him. It's not just a PDF being done and an insurance document kind of filling in the fields and, it's on a database. It's actually authenticating that one truth record is what it is, and you can only do that through real mathematics.
So before all you naysayers in the audience bring up the Australian Stock Exchange, the ASX, and saying we've had dematerialized documents and titles of proof for a while now, even before Bitcoin, the answer is that it's that this kind of stuff that they're talking about is mathematically proven to be unique, rather than an entity will sit there and say, I think my database is in order, but you have to trust me on that one. That's where you're going with this. Okay, cool. Blockchains, distributed ledgers, multiple entities. Okay, are any of your proof of concept? So bearing in mind, folks, we are in the very early stages of testing this stuff out, and the technology is evolving as we go along. Are your proof of concepts with multiple entities, or are they with single entities at the moment, later to be joined up and to harness, I guess, the full power of this shared data? So the example is, are you talking with are you providing technology to insurance providers, or insurance providers plus the point of patient care, for example, the doctor and things like that?
So basically, we all know, like when somebody approaches us and say, hey, I want a blockchain for this, I was like, well, what's the point? Like, if it's one entity and it's only staying that silo, well, doesn't do anything for you. Just use your database. So the ones that we're doing are with the intent that if we're going to do it, it better be for a network and there's other participants in there, such as like a health record or doctor, patient, things like that. If you're just doing it for yourself, then it's like, well then, yeah, there's no point. So the intent for each one is that do it for ourselves so we can get the ball rolling, and then they'll either roll it out to partners, or if you talk to them in the reinsurer space, their reinsurer basically has a network of customers, so they can bring value into basically will be the authentic truth, we'll run the ledger, but everybody tap in and they all benefit from it. So there has to be a network play at it, otherwise there's no point.
Ditto. Yeah, same. Yeah. So same thing. So we're working with an insurance company and a bank to form a consortium essentially on a blockchain with the long-term goal of adding in more insurance company, more banks, more players into the network. But initially, it's between two players to start with. I completely agree with Pavel. Blockchain makes sense when it's multiple players, or it could be a single institution that has multiple locations that are not currently communicating with each other or have their own silos of information. So that's actually a good use case internally for a company, is international companies who need to communicate with each other securely or share information securely. But in a use case within an industry, it makes sense as far as multiple players or cross players between different industries to use blockchain.
So how are you interacting as an industry with regulators who want the data not to be shared across borders, but in general, in a lot of industries, I'm familiar with finance rather than insurance, they want their data on site. See, cloud's been having this battle for the past 10 years or so. So how have we brought in the regulators into this conversation yet, or are we still a bit early?
So I think it really depends upon your specific use case. So for example, if sharing customer information, that comes under, what is it, the PDS, Private Data Security System, or whatever they call it here, PSDA, I think. So in that case, you're using cloud security information, so you need to keep your data within Singapore, at least for the POC trials. We haven't gotten to commercialization yet, so that'll be another hurdle to overcome. As an industry or as a member of the industry, we have an association called Access, which I'm a member. It's a cryptocurrency and blockchain association, and Anson is actually the chairman of that as well. So we try to communicate as a group to the regulators.
So like from Access point of view, for example, we're having a roundtable for the payments consultation paper for all the members to put in their comments, and then we submit it to MAS. So for insurance, once we have more players within Singapore that want to provide an opinion in linking to, for example, payments or blockchain, and want to submit the data, the comments to the relevant regulators, we definitely can help out on that. But in terms of as a whole industry for insurance using blockchain, that is still in the very early stages.
And I come from the regulatory point of view from the bank side. I worked in the Bank Act for many years in Canada. And I mean, philosophically, the idea of jurisdiction is what's under stress right now. The very legal concept of jurisdiction is what is feeling a lot of stress. Not, the internet started it, but it's continuing to a great degree. And what we heard earlier about multiple parties being involved, that's, I think, the most important thing here. And I think there's actually a real opportunity for insurance companies and all kinds of industries to become part of regulatory compliance, to allow the rules to be enforced by the technology. And so governments pass laws that explain how things are supposed to work, but because we're talking about the rules to write into ledgers here, what are the two questions you have in the digital world are, who are you, and can you do what you're trying to do? Authentication and authorization. The authorization part is where you can bake a lot of rules into this stuff, the rules by which new entries are written into the database. And there's a way to include government in that conversation, and I try to do it as often as I can. They're not always receptive, but what are you going to do?
Poacher turned gamekeeper, or rather the other way around. Okay, let's get interesting. So far we've talked about industry workflow tools. You're making money by trying to help incumbents do what they're doing more efficiently. Is that fair for at least the three of you? Not sure where Skuchain sits on that. And we'll come back to that in later. Do you think there will be new insurance products off the back of these blockchains and distributed ledgers and fabrics for money and things like this? Or will there be new ways of mutualizing risk, something that makes these guys have to kind of sit up a little bit and pay attention?
Well, going to the first one, it's not about helping the incumbents become more efficient. For me, it's basically how can we deliver better products for basically the masses. I think I heard the study that maybe only like 8% of Asia Pacific actually has insurance. So my goal is basically how do you build better products, increase the standards of living for all these people? And then one of the channels of distribution to do that is through insurance companies that we have. So about building better products. Like what you guys said earlier, I think it's really early. It was, I think we're going to get new business models. I don't know what those are yet in terms of insurance space. I was with one insurer last week, and we were talking about some of the use cases we did. And he said, those are interesting. We could do those. But he goes, Pavel, let's really, and this is an existing insurer, a big one, and they said, let's do something really, a real new product that no one's thought about that we can test and prove out there because, nobody knew Airbnb or Uber or any of these things would have existed when the internet first launched, and, all these different types of platforms. So amazing. I think we're just super early, so we start doing little things, but it's like, who knows what those new insurance products will be? It's just like I can't even think about it right now because we never thought of these other ones.
But Nolan's itching to tell us about the new.
Okay.
No, I mean, there's the Internet of Things part. That's a new aspect, and then just stuff that I've seen in my everyday life. I'm from Quebec. There's one little flood-prone area, and they literally can't buy insurance because no one else is flood-prone in our province. So the jurisdiction itself makes the product unavailable. So can you mutualize over borders in geographies that are sharing similar circumstances, that are undergoing the same kind of risks? That becomes possible all of a sudden. So that might be a new product. I don't know, but it's tempting.
And would that be an Airbnb? Or would that cut out some middlemen and be replaced by a technology platform, or would you still need someone to manage all of those different moving
I think you
parts?
can certainly make it less expensive. Florida, you cannot buy hurricane insurance anymore, and then all of a sudden we haven't had a hurricane event in 15 years. They're going all up the coast. They're selling them insurance up in New Jersey keeps getting hit. It seems like, and why can they buy? And why is it possible for them to buy?
I'm going to kind of contradict you here. Aren't you just moving the risk to the masses then, rather than the professionals?
He's trying to make everyone's life better. You're trying to make it worse. If smart insurance companies aren't going to sell this stuff to these guys, do you think other people will just because they're sitting in a different country?
I think people can mutualize differently. I'm not sure about the business model that would take to deliver this product, but that it is now possible is what is attractive. That it is now possible.
Okay, thank you. Do we have questions in the audience? Or I got more questions for these guys, but do we have kind of burning questions? We've got a couple. We do have questions. Okay, good. So I'm going to ask one last quick round, and then we'll go to the audience. So what happened to the remove the middleman narrative? Aren't we adding them? Are we talking disruption or evolution, and how close are we?
As from when I interviewed the customers, my insight is still that insurance needs to link to the industry that's existing. If it's medical, you need to work with healthcare. So you can't really just have two insurance players doing pilot. You need to have like two insurance players plus two healthcare players. Okay, so in terms of just having to do a service that can remove them, there is not the way to remove disrupt the insurance or healthcare players, for example, as far as the medical industry is concerned. It's the TPAs, as they call it, the third-party administrators. Okay, so there's a lot of them right now out there helping them to process the claims insurance, and those ones are actually charging the bulk of the money. So the insurance companies have to pay them, and they're passing on the cost to the consumers, to customers or consumers or businesses. So from there, if there is a point of disruption and innovation, maybe it's to target the TPAs.
Yeah, for me, middlemen, I think it's more about just redefining the role and understanding what it is. I mean, if you really look at the industry, one of the first industries disrupted was music because of the internet. So the record label, if you think about it, what's a record label? Really, it was a middleman. And yes, there were distributors and companies in between who truly got out of it because it went digital. But even the record companies stood in the middle of an artist delivering that music to the end consumer. Record labels are still around, but they just kind of switched their role to more, hey, we'll manage live entertainment, we'll take care of your merchandise, other things they did before. So, insurance space, that's not really a middleman because they have the trust global platform reach. Maybe the agents in the middle, they got to change their role of what they do, like maybe paper processing. If it goes down a lot, they can focus more on sales and doing customer service and going out there and getting more people to buy insurance as opposed to spending, all day filling in forms. So I think it's more of just a redefining of everybody's roles along the supply chain.
It's an industry that's filled with trust and filled with specialists that provide that trust, and there was a certain cost to that at a certain point. I think we can reduce it.
So it's going to depend upon what the policy is and what the application is. Some insurance policies last 50 years, maybe more, and in that case, you obviously need to have a certain level of trust with the organization. Other ones are very short. Insurance for my mobile phone doesn't last more than 2 years. So that might be interesting to do a P2P model in something like that. And certainly smart contracts and blockchain can help with that. And I think the public, in that case, the public would be a good group to go to for those sorts of things, although you would probably still need some sort of person or group of trust to verify that this event happened.
I'm so disappointed. Oh, you're meant to be the disruptors. You're meant to be sitting here saying how you're going to kill the industry, et cetera, et cetera. Okay, there's a gentleman over there with a question. Can we get a microphone over there?
Oh, me? Yes, the cost of hacking, we're talking about blockchain. How can you make sure that's a profitable model against what hacking would cost you? Or what cost the insurance company? What cost us?
Yeah. We have sprinkler systems here because the safety aspect of the bond of trust incentivized us to secure buildings in order to lower our premiums. I'm curious what will happen when people start buying really sophisticated cyber insurance products and they come in and say, well, why are you holding this data? Why are you holding that data? Why is all this data being held in order to, in America we had the Home Depot hack. This is a hammer salesman being asked to keep the same information as the banks in order to give us some loyalty points or something ridiculous like that. When we get sophisticated cyber insurance appraisers that come in and say, well, simplify the amount of data you're holding, it might actually lead to a huge uptake in blockchain technology, I think anyway.
Over there. Anyone else want to comment on that from the panel?
I've got two questions. The first one is in terms of, I know that we're talking about the public ledger, right? I mean, that will need to rely on a large network of computers to authenticate the transaction. I'm just wondering, for a private institution or financial institution, what would be the cost? Firstly, whether you will see that they will use the public ledger, which I doubt, but if you go with private, what's the capacity and the cost of it to put it off? My second question is actually related to this. So when you have a transaction blocked in the chain, I don't know what, because I haven't looked into the details, but is there a chance of that transaction being fraudulent? And if that's the case, if you only find out in a very later stage, what would be the ways, the method to reverse the chain?
So
or do you have alternative solutions for it?
So the second question regarding authenticity of a transaction.
David, just before you answer that, can you rephrase that? I'm getting some puzzled looks from people in the audience. They don't know what's going on.
We'll start with the second question because that's the one I remember. The second question had to do with when a transaction is put into the blockchain, how can you be sure that it hasn't been altered, right?
And what does a transaction mean? Is that a payment, or is that a contract between two? What does that mean?
It could be submission of a contract. It could be submission of payment from account to account. It could be any data entered into the blockchain. Blockchain, as far as the ones that we work with, always require a public-private key pair. So only the owner of the private key can put that information into the blockchain, and all the nodes on the blockchain verify that that transaction has been signed by that key. So it's impossible to fake. What you could do is hack the key, steal the key, and then create a bogus transaction. But the transaction is still valid as far as the nodes are concerned. I can't remember.
So cryptographic security is, I think, the answer to one of the questions. His question was on actually what happens if something doesn't actually make it into the blockchain? How can you frig it afterwards? Maybe it's something you can take offline. It gets quite technical.
Yeah.
Was there one over here? Can we get a microphone over here, please?
Yeah, my question is just, as I understand the technology, it relies on this concept of compute power to prevent people being able to defraud the system. Just looking towards the future, we know there's sort of massive development in computing power. How are we future-proofing blockchain against those people trying to attack the blockchain system with those kind of resources in future?
So you're talking about quantum computing in that case? Okay.
Well, I think I'll do it first. I think if we get to a point where quantum computing is happening, it's getting faster. If that starts basically figuring out blockchains and things like that, we've got bigger concerns globally than just the blockchain and insurance stuff getting hacked. Quantum computing would basically, if it gets to that level, we are talking probably Skynet and things like that.
Let me try and explain. I think you're talking about this on two different levels. The first is there's a conflation between Bitcoin, which has a lot of people Bitcoin mining, which is kind of securing the network, and they're using data centers to do this. The kind of blockchains these guys are talking about doesn't use this mining concept. They're signing stuff with keys, which is a very, very low energy intensive. It's like a couple of mathematical calculations, very, very trivial. And they're using the trust from those cryptographic keys instead of throwing a whole bunch of hashing power, mining power at the problem. So the Bitcoin type of problem goes away. Now, the second point, which I think Pavel was answering, was if you can crack cryptography, you say it. If you can crack cryptography, then a lot of other things are broken. A lot of the S in the HTTPS, which keeps the interaction between you and your bank secure when you're online, that's all based on similar types of cryptography. A lot of things will break if that comes. And there's this arms race between cryptography getting more secure and better, and computers getting faster and being able to break that. And that arms race is always going on. Are you all nodding? Okay,
yeah,
everyone.
And one other point, it's not that it's faster in the case of the public blockchains, it's that it's less efficient for a hacker to get in. They have to lie to so many people. They have to hack so many computers in order to make something not true enter the ledger. So it's simply an outsmarting of them, not an outrunning of the hacker.
All right, guys, thank you very much. Time's up. Let's join me in a clap for these panelists.